Welcome to Real Estate 360, an informative and engaging hour discussing everything you need to know about the world of real estate. Your host, Tom K. Wilson, will provide you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. Now, here's your host for Real Estate 360, Tom K. Wilson.
Welcome to the Real Estate 360 program, your number one source for all real estate needs here in the Bay Area, where we provide you with the information you need to make the best fact-based decisions. By popular demand, Real Estate 360 is growing from a once-a-week weekend program to a Monday through Friday daily program beginning October 29 at 3 p.m. I'm Tom Wilson, your new host for the Wednesday edition of Real Estate 360, and it's an honor to be a part of the radio KDOW and the Real Estate 360 team. We have a great program for you today, including guest Richard Crouch. He's a veteran Silicon Valley high-tech entrepreneur and top-producing real estate agent for Alon Pinnell Realtors. Richard has used his high-tech background to track the market, and will be sharing his insights into what is happening and where things are going in our real estate marketplace. So I think you'll find that very interesting. At the end of the program, I'll give you Tom's top tip of the day. First, I'd like to introduce myself so that you know the background and perspectives of your host. Again, I'm Tom Wilson, and I'm an engineer by education. I came out to Silicon Valley, or what was to become Silicon Valley, in 1969, and have managed manufacturing and engineering and sales in a number of high-tech companies. Fortunately, I got some good advice back in the early years in the 70s to invest in real estate. In fact, my first landlord lived next door to me, and he owned most of the street. I thought that was a pretty unusual thing, but I took note and followed suit when he encouraged me a little later on. The main problem I had was that I confused real estate investing with being a landlord, and didn't like being a landlord, so I stopped buying after a while. But you know, the key is to learn from your mistakes and later on apply what you learn and move on from it. So in the 1998, 99, I was starting to get a little burned out from the high-tech scene. It was on with my second startup company. And I noticed that my real estate portfolio was contributing more toward my retirement than my 401 and stock options were. So I said, well, I think maybe I'm going to go do real estate, but where the heck do I do it? So I interviewed everybody I could find who was a experienced investor, and lo and behold, I found that they were investing in all kinds of places. So I studied it, and for me, for my objectives at the time, Dallas-Fort Worth came out on top, and I proceeded to start selling off my California properties and buying properties there. So it's hard to believe looking back now, but my staff tells me I've bought and sold over 1,800 units, including 7 multifam properties, 3 condo conversions, and 3 syndications over those years. I've retained about 230 doors of my own, and I have a business called Wilson Investment Properties that provides high-quality rental turnkey investment properties to other investors, many of them here, or most of them here in the Bay Area. So that has been a great joy, and I've met many people and expanded my network quite a bit, and have been invited frequently to speak in different groups throughout California and in Texas. And I have been affiliated also with San Jose Real Estate Investment Association for 9 years. Geraldine Berry is the president of that, and that's a great networking and education opportunity that I highly recommend people who are looking for education that they can use to make better decisions. As a personal note, I've coming up on January, I'll be celebrating my 45th year of marriage to my registered nurse, Ouija. And I have a daughter who's a veterinarian, married and living in Santa Barbara, and where we enjoy visiting. And of course, every new city I get introduced to, I go have fun taking a look and seeing if I can make money in real estate there. So I've lived in Silicon Valley now for 43 years, and Saratoga 19. So that's where our business base is for Wilson Investment Properties. And I have a website, tomwilsonproperties.com, that has a lot of investor education information that we welcome you to go to. There's also a newsletter you can sign up to that gives you a weekly snapshot of what's going on in the economy as it relates to real estate. So that's the nutshell. That's my real estate background, and certainly my main wish over the weeks is that I can use some of those experiences and to share with you things that I have learned that might help you in your investment decisions. So today we have Richard Crouch, who is a longtime friend. He's a entrepreneur from high tech. He graduated from Georgia Tech, and he has been in the Navy in the past and spent about 30-some years in high tech as well. And he made the transition to the world of real estate about the same time I did, about a decade ago or so. And it's a pleasure to have him on the show today, and we'd like to welcome you, Richard.
Thank you, Tom. It's great to be here.
Nice to have you. I think the first thing I want to ask you is what kind of led you to make your transition from the high-tech world into real estate? You know, what I find is there are many people, especially here in the Bay Area, that have day jobs in technology who invest in real estate. And I've had some people ask, well, that's kind of interesting. I wonder why that is. And I think because real estate investing is really, an analytical numbers kind of business. It's not do I like kitchens with yellow paint on it? It's do the numbers work? And I think that works very well for those who are analytically oriented. But to make the transition from not just investing, but to make a career shift is another thing indeed.
Yeah, well, I actually began my career in high tech in 1968, and basically had a big success in my high tech venture startup with Cat Technology in the dot-com period. Survived the dot-com period. At that time, the high tech landscape didn't look particularly attractive. There was a lot of the money had gone poof and so on and so forth. So it was a time in which I thought I would look around and see where do I go next. And I've actually had a real estate license since 1982. And just as you just said, over the years, I did quite a bit of investing in real estate, including my own development of properties down in Morgan Hill, and buying and updating and reselling luxury homes, etc. So that coupled with my own personal plan eventually to retire in Tucson, Arizona with my wife. And real estate is a wonderful field to be in down in the desert. And so all of these things came together, and I just concluded, since I had a wonderful opportunity with Lon Pinnell, a very good friend there, Kevin Cole, to join them in 2002, and I've been there now for 10 years.
Thank you, Richard. The marketplace has certainly been very dynamic over these recent years, or actually for the past decade is, I guess, quite an understatement, but you would kind of amazes me how much it still surprises us and still varies, and it's hard to predict. I have the honor of knowing Dr. Doug Duncan, the chief economist at Fannie Mae, and when I've asked him in the past, Doug, where things are going, his first statement is, if anyone tells you they know exactly what's going to happen, he says, run like heck, because I don't either. So I think that's good to keep in mind. Those that are at high levels that have a lot of influence, you've got to be very careful about. Ben Bernanke in 2005 said he thought things were going to be fine. We wouldn't have a drop, and the economy would stay pretty strong in spite of the buildup. And we all know that didn't pan out. So I think it's always good to get information from some various sources before you make a decision.
Yeah, well, I've been here long enough now, 35 years, that what I used to tell people is, the real estate is very cyclical in California, as it is in the rest of the country. But we see bigger swings because we've got more muscle, Silicon Valley industry, for example, not to mention the best weather in the world, with the possible exception of the Mediterranean. and wonderful city of San Francisco, sports, the mountains nearby. Let's face it, it's a wonderful place to live, and we're all very lucky, I think, to be here.
That's why so many of us who are here came here, because we like that environment, right? We weren't just born here. We came here because we wanted part of that dynamic excitement.
Yeah, and I think the real test of how you used to tell people, well, okay, the market's down, but you know what? It's going to go up again, and the industry is going to sustain us. Silicon Valley, first of all, helps the Bay Area. The Bay Area helps the state of California when it comes to the numbers. And I think in 2008 and 2009, a lot of us actually thought, is this the end of the story? In other words, can we really recover in a way that it truly is a market cycle that did recover and brought us on to even higher levels? Very difficult to believe that that was going to happen. Interestingly enough, it has. And we'll talk more about that in a bit.
Oh, it certainly has its swings, and I'm watching cycle number 4, so that's a no surprise. But I remember that when I shortly arrived here as a young engineer, we had our first crash, and they said, well, all the jobs are going offshore, and Silicon Valley is over, and Silicon Valley is dead. It'll never come back. But I think Silicon Valley and the Bay Area just have to me, they're the definition of synergy. It's where all things come together that creates something that's the whole is greater than the parts. And indeed, every time we've come back at actually stronger than we have before, and it's always built on the foundation of what's before. And everybody says that, gee, well, how can you predict that it'll come back? Because can you identify what the product or service is that's going to bring it back? And each time, you can't precisely identify it, but the synergy and the pent-up demand after a while. Yeah,
and there's one thing that actually is in this since 2008 is very different. Silicon Valley was born in Palo Alto, Fairchild, HP. The industry grew rapidly through the 70s, 80s, and 90s into San Jose with large companies with lots of manufacturing. This time around, you can now see companies expanding into Santa Clara, expanding into Sunnyvale. They will eventually also expand into San Jose. But the thing that's really different is that the jobs are not the manufacturing jobs that we have lost to Asia, but rather jobs that have a much higher level of education and experience, people in software, in design work, and so on and so forth. So we all have to realize that that's something that's pretty much a permanent situation. We have to try to figure out on the basis of that what's best for each of us in terms of what we do here in the Bay Area.
Indeed, and those all of those dynamics certainly have a significant impact on what happens to real estate itself. And so you can't really live here and be involved in real estate and not pay very close attention to what's going on with all those economic drivers.
Exactly.
Indeed.
Yeah, I think you have to stay in touch, read the paper every day. I think of the Mercury News business section as kind of like the episodes of Peyton Place.
Yeah.
I mean, there's lots of stories that are very interesting. I mean, look at Larry Ellison. Look at a lot of these people who have done some amazing things. And I think you have to stay close to it and pay attention. And then the real estate section, of course, obviously that's a no-brainer.
Well, I certainly read the Journal every morning, but I still get the paper Mercury News and pull out that business section to see what's going on, because for those of us that are affected by real estate in the local area, that's certainly something that keeps tabs on how that's going.
Absolutely.
So we're going to take a short break, and when we come back, we're going to start to dive into the specifics of our real estate and how these factors are affecting it. So let's chat about that right after this short break.
For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. Now, here's your host for Real Estate 360, Tom K. Wilson.
Welcome back to Real Estate 360. This is Tom Wilson, your host, and we have the pleasure of having Richard Crouch here today, a one who follows the market very closely in real estate, and he's sharing his views on what he's seeing and where things are going. You know, it's an amazingly dynamic market still. You would think after this amount of time of as many changes we had that things would have settled down. But I just noticed from, I read and highly recommend foreclosureradar.com. Sean O'Toole's a friend of mine and someone I highly respect. And he has the site that provides the best foreclosure data in the western 7 states. And he puts out pretty good blogs. Just noticed the last one, he shows that the notice of defaults is down 48% in California from a year ago. That's amazing. He says it was reported recently that the nation's 5 largest mortgage services have implemented all of the 320 servicing standards required by the National Mortgage Settlement. The continued decline in foreclosure starts clearly shows that even those servicers are now apparently in compliance and clear to move forward with foreclosures, they are still in no rush to foreclose on the majority of delinquent borrowers. So if you're an investor or just watching the market in general, and you blinked, you would have missed that hedge funds are now buying everything they can, often over market, because their expectations are that they will sell downstream at a cap rate that'll still make the margins acceptable to them. Banks are not foreclosing, and buyers who lost their homes in 2008-9 are now back in the marketplace. So we have a very, very strange supply-demand imbalance when you consider how many homes, something like 11 million, are still underwater in the country. So, Richard, we've chatted a little bit about the difference in Silicon Valley and the Bay Area and San Francisco and the rest of the marketplace. But, so tell us how you think the market is doing here in the Bay Area and how that compares to the U.S.
Okay, well, first of all, Tom, let me mention that I have an excellent presentation, which is much too in-depth to try and even talk about in this show, but we would love to make it available to anyone that might want it. It was presented by Leslie Appleton of the California Association of Realtors, and it basically looks at every possible statistic you could imagine, and it does it in a way, however, which is, I think the layman can really absorb it very nicely. And so we're going to make this presentation available on our website, and also if somebody would like to request it from me via email, the website is www.richardandcandice, now Candice is KANDIS.com, richardandcandice.com. My email address is rcrouch@APR for AlonPinellRealtors.com. Let me just talk about this first slide here, because you were just talking about, Sean, at Foreclosure Radar. People would like to understand what percentages are all the sales right now. Well, I've got it right here in front of me. It's the first slide on this presentation I just told you about.
Before you jump into that, Richard, let me just add a little comment. In the business that I'm in, as a full-time investor, of course, it behooves me to not track what's going on as much as I can, and of course, you have different information from different sources. So I have people who are watching all of these different reports, and I must say that from a history standpoint, I find that CAR, California Association of Realtors, and NAR both give very good data about history. They certainly aren't the only ones, but they are the ones that track the recorded transactions that go on. The one thing that I've noticed and kind of advised to people is that since they kind of have an axe to grind, they're trying to promote real estate volume, is you have to be a little careful, I think, on predictions. But from history, from a history standpoint, I find them to be quite good.
Well, it's like anything. You know, if you're in a business, you want to be optimistic and you want to say things that are positive. People don't want to hear the negative things, especially if there's no certainty of those negative things occurring. But you're right. When it comes to the data, I think most intelligent people, and I think that's everyone listening to this show today, can look at this data and can draw some really good conclusions for their own situation.
And that's why we love having on folks like you who can look at that data and help make sense out of it for us.
So the total number of equity sales, basically, I guess this is pretty much in the quarter ending August 31st of 2012. Total sales, 62.2% were homes with equity. In other words, not underwater. 23%, and this is California, 23% were short sales, and 14.4% were bank-owned properties, commonly referred to as REOs, real estate owned. So,
and this is all California, right,
yes,
Richard?
California. And the number of short sales are going up, the number of REOs going down, just as Tom just indicated, the reason being that the banks are really trying to help people rebuild and get a fresh start and move forward. And certainly that's the right thing to do for the strength of our country. So as far as one quick note about the immediate situation, what we've got right now is a lot of uncertainty. The uncertainty has to do with the election. It has to do with the economy. It has to do with the lack of future data. And so people essentially are doing nothing. When there's uncertainty, people don't buy generally, and they don't sell. That's just one of those things of human nature. On the other hand, because the inventory is very limited, there's multiple offers on most properties, and the prices are going up as we speak. So that's something you got to keep in mind. Another thing that you have to keep in mind is because of the recession, we have historically low interest rates. And as soon as volume and prices really kick into medium gear, not even high gear, those rates are going to go up. And that's something you have to be very cognizant of. What I recommend, there's two areas for sellers and buyers. This is really what you should be doing. As a buyer, you've got to get pre-qualified now. All of the banks have much more complicated pre-qualification procedures. You have to go through a lot of paperwork, a lot of interaction to get qualified, and you need to have that qualification before you go in and make an offer on a property. If you don't do that, you're not going to win if you end up with multiple offers.
Okay. On that note, let's take another break, and when we come back, we'll talk a little bit more about what buyers and sellers should do, and what we kind of can expect from your perspective in the near term. We'll be right back.
For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. Now, here's your host for Real Estate 360, Tom K. Wilson.
Welcome back to Real Estate 360 on KDOW, where we have Richard Crouch, experienced agent in the Bay Area, giving us his perspectives on what's happening to the market and where we're headed. So, Richard, you were talking about how important it is for someone who's a potential buyer to get their financial qualifications, their loan qualifications in place now. And are you saying that in part because you see a dynamic situation about to change here?
You know, that's always been an important thing to do. I mean, the only way you're going to know how much money or what price a home you can buy is by having a pre-qualification, unless you have cash, in which case then that's easy, right? But the banks are really being a lot tougher now. I mean, coming out of this recession, they've got all kinds of requirements and, limitations. And
one of the frustrations I really see is that, if you read the journal and you see Fannie, Freddie, FHA have relaxed something, and you think, oh, great, now that client or that friend or myself can now qualify, and you go find out that the bank has kept an overlay on top. So at the bank level, it really hasn't improved. So
right.
It's just the world you got to live with. Right?
Yep. So I think so I mentioned pre-qualification for the other things that a buyer needs to do, and now, not waiting for the market to take off. they need to get out and find out where they want to live, okay? Narrow down, in other words, price, location. We all know that. The quality of what they're willing to live with. Are they demanding a home that's been fully updated? Or, which is a smarter move, buy a home that hasn't been updated, which is clean and well maintained and in a good location, because money you put into it will come back to you in many ways in the future, and a positive return. So if you wait until even February or March, you're going to be overwhelmed with competition from other buyers. The amount of buyers that are out there now, there's tremendous pent-up demand. And so when you have that, it's like the old cork popping out of the bottle. And it's also a reason why the banks are being very careful on how they dole out properties that they own. They're going to do it in a way that increases the potential price sold for their inventory. They're not going to do something that's going to cause the market to crash or go sideways or whatever. They're going to do it in a very managed way, a business approach to what they do with the inventory for, real estate owned properties. So you really need to get started now if you're a buyer. Now, what about sellers? The vast majority of sellers, those who do not have an urgent reason to sell now. In other words, they've lost their job, they just can't, they don't have any more money to make payments, they don't want a short sale, they can sell now and come out clean. They are the ones that are selling, and unfortunately, it's the reason the inventory is so small, because there aren't that many in that category. Now, sellers, however, who want to move up, they want to get a bigger home, they absolutely should be selling right now, because even though they might lose something on what they sell, they're going to more gain back on something more expensive that they buy. And if they wait until March, April to do that, they're going to be in for a rude awakening. There's going to be a lot more competition for properties.
And the great-grandchild of Lafitte Rothschild, at one time the wealthiest family in the world, was once on an interview asked to what single thing did they most attribute their great wealth of the family. And he thought for a moment, and he said, by selling too soon. So
right.
People hold out for the exact bottom or exact top, often miss out.
Well, that's
once
right.
It changes, it's getting a little late.
Well, yeah, and let me just say this. Beyond the spring, let's say beyond June of 2013, there is definite risk. If you are thinking, I'm going to wait to the middle or the end of 2013, you could be in trouble if we had a catastrophic event on this planet. And Lord knows we've had plenty of those. So we'll talk a little bit more about that when we get back from the next break.
Okay, that'll be good. We'll be back in just a moment.
For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. Now, here's your host for Real Estate 360, Tom K. Wilson.
Welcome back to Real Estate 360, where we're enjoying hearing the insights from Richard Crouch. Richard, my take is that you are sharing with the listeners here how they should be prepared to make a move if they're considering it all, because if they wait for things to change and then they want to make a move, by the time they do their preparation, they may have missed an opportunity. Is that right?
It's absolutely true, and there's an analogy in the financial markets. If you know that you want to buy low and sell high. What happens usually is 83% of the time, in fact, whether it's stock investing or whether it's in real estate, is people don't make decisions to buy until everything is going nuts. Oh, I just got a stock in this company, Google, and I'm going to go buy some, and the market's doing great. Or, gee, he just got an amazing price for that house. I'm going to go sell mine now. The problem is that what people really end up doing is they buy high, therefore, and sell low, which is the exact opposite of what you want, a situation you want to be in. Okay?
Well, certainly your comments are in general that applies to any time in the marketplace. This will date this program segment a little bit, but since we're airing this at 2.5 weeks prior to the 2012 election, I can't resist asking what your thoughts are on how you think this election might affect the market, and to what degree you think there's pent-up buyers or pent-up sellers.
Well, the biggest factor with any election year is uncertainty prior to an election. I mean, if you look at the last 3 weeks, the financial markets had been kind of quiescent. And then when Romney had that presumed big win in the debate, the first debate, the markets actually jumped up a couple hundred points. I suspect they're going to probably fall back a bit. In fact, it already started happening, as it seems like Obama, from the analysts, what they're saying, overcame some of the problems that he had in the first go-around. But absolutely, election year is important. Generally speaking, the economy does well, largely because the uncertainty is gone. They know what the president and the Congress are going to do, and certainly it makes a difference on whether it's a Democratic or Republican Congress. Now, it doesn't mean that on November 8th, we can go out and start investing on the basis of the election being over. We have to give it a little time. You know, the end of the year is a time when some people buy and sell homes. Most don't. Most of them start thinking about it after the Super Bowl. That is absolutely not a joke. It is true that when it comes to residential real estate, at least in Santa Clara County, in my experience, the big markets begin after the Super Bowl, which has lately been around February 5th. And up to that time, wives can't get husbands out of the house. You know, it's a fact. So, but I think that this year is the potential for the market to take a jump sooner is possible, largely because of the uncertainty of the election, but also because of where we've come from with almost no inventory, coming out of a recession. The pent-up demand for buyers and sellers is really huge.
How concerned do you think people should be about a possible black swan happening out there and affecting this market?
Well, I mean, certainly we have to keep that in mind. And that's one of the reasons I said don't wait until after the June of 2013. If you feel you want to sell, you need to buy something bigger, you want to sell because you're going to move to somewhere else, or you want to buy because the interest rates are low, you got to do it now. Don't come to the conclusion that from next summer on it's going to be a better time, because it could be, but it also couldn't be, with very large percentages, because world events, the black swan you talk about, we're very much a victim of the world economy. This planet is infinitely smaller than it has been in the past, and we have a very complicated situation in the world, and that definitely is not something you want to try to second guess. So I'd say if you need to make a move, you need to start doing it now and be prepared. As you said, doesn't mean you have to write an offer now, but you need to be ready, and you need to pay attention to the inventory and where you want to live, how much it costs, and know your competition. How many buyers are there going to be? The longer you wait, the more competition you will have, whether you're a buyer or a seller.
Indeed. You can't you can't predict the black swan, but you can be prepared to make a move so that you've done something prior to that, and that's something everybody needs to be prepared to do. But I think you, as technical folks, you and I have always looked at the bell curves of probability of things happening, and I think you need to be prepared for those skirts that are out to the side. But you really place your main bets on what's most probable that's in the middle.
Yeah, that is correct. That is correct.
So where do you think things are going to go? Do you think it makes any difference which way the election goes, or do you think it's mostly just going to change because some of the uncertainty is removed?
Yeah, the market will stabilize in the sense of uncertainty waning, right? On the other hand, it's not going to instantly go from limited inventory to a lot of inventory. So there's going to be definitely an adjustment there. It's a little bit hard to predict. It, depending on how quickly that occurs, will affect how quickly prices will go up and how quickly interest rates will go up. So I think you have to make the assumption that with the election over and clarity on what's ahead, again, in the absence of a black swan, that things are going to get better. Now, that doesn't mean 10, 15, 20% increases in prices of homes, but it does mean homes will be more expensive. I can guarantee that to the bottom of what I know in the spring, late winter, early spring, they are definitely going to be more expensive. And so you have to take that into account, and interest rates are so low.
Now, on that, is your comment Bay Area based or California or national?
Well, it's really, some of that applies, I think, around the country. We have to keep in mind, however, that certain areas of the country have certain advantages where they're insulated to a great degree from recession or, down times in the market. We are very fortunate with Silicon Valley. Clearly is a major contributor to the positive side of the equation. And everyone in the Bay Area benefits from it, but so does everybody in California.
I'm always amazed at how much difference there is from one metropolitan area to another across the country, even in the past. But this time, for example, Case Schiller, who's probably one of the most referred to authorities on tracking prices, tracks 20 of the top metros, and we have one city, Las Vegas, that dropped 58% from the peak, and another one, Dallas, that dropped 7.7%, and San Francisco Bay Area didn't do quite as well, but we did better than most. So when we come back, we're going to chat about that a little bit more. We'll be back after this sponsor.
For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. Now, here's your host for Real Estate 360, Tom K. Wilson.
Welcome back to Real Estate 360, where Richard Crouch has been sharing with us his thoughts on the marketplace now and where things are headed. So, Richard, we got just another minute or two. Let's see if we can, for our listeners, draw kind of some conclusion. I think you have another point you wanted to make before we do that.
Yeah, I just wanted to add on to what I was saying about Silicon Valley and how blessed we are to have that industry here. But I think we don't want to omit thinking about what else we have here in the Bay Area from a business point of view. As I was driving here from San Jose up to Fremont, I couldn't help but see the big Tesla logo on the old GM Toyota plant. And
it's a wonderful sight to see, isn't it?
It really is. And, it's indicative. Every time I turn around, I was playing golf not that long ago with a guy who was starting a company, and he came from Detroit. He was hired from Detroit, and his expertise was combustion engines. And I'm sitting here thinking, combustion engines? Wait a minute. What the heck would Silicon Valley be doing there? He said, well, we found a way to make them infinitely more efficient. And Silicon Valley is ready to invest in us because of that. So, we've got pretty exciting things going on. And as you mentioned during the break, Tom, we can't overlook biotech. It's an industry which is a really, really strong industry for us in the Bay Area and really California. And the thing is, things don't happen as quickly in that business. You don't come up with a new drug unless 5 to 10 years goes by. So you just don't hear as much about it, but they're in there coming up with all kinds of innovative solutions. And I know one of those is relative to MS. There's been some major advances relative to MS from the biotech. So that's pretty exciting. So let me just close out my part of this by saying that if you would like a copy of this presentation from Leslie Appleton Young, and I left Young off when I first mentioned it, come to my website, Richard and Candace, Kandis, at .com, richardandcandace.com, or send me an email, rcrouch@apr.com, or feel free to give me a call if you'd like at area code 408-391-1231. I've enjoyed being here today. Thank you, Tom, for the opportunity, and thanks to KDOW for making the opportunity available.
It's been great having you in the studio, Richard, and we certainly look forward to having you back. I told you I would give Tom's top tip for the day, and that is don't get too much on your plate at one time. I've on more than one occasion I have given advice to young investors, and I see them a couple years later, and I say, well, John, how did it go? And with your investment decision, said, oh, it's great. I now have 10 properties. I said, where are they? Well, I have one in Atlanta, I have two in Dallas, I have one in Memphis, I have one in Antioch, and they have them in 9 cities. Oh, that's a management nightmare. So, you know, it's very, very easy to get diluted, and you don't want to get defocused too much. So, don't get too much going at one time. By the way, if you want to contact me and send me some request of kind of guest or subjects you'd like to be covered, or if you want more information about today's program, please contact me at 408-867-1867, and the TomWilsonProperties.com is the website where you can sign up for a newsletter, and also there's a lot of investor information on that website as well, which we encourage you to take advantage of. Well, thanks for tuning in to our Real Estate 360 program on KDOW today, your #1 source for all of your real estate needs here in the Bay Area. Remember, the Real Estate 360 is growing from a once-a-week weekend program to a Monday through Friday daily program beginning October 29 at 3 p.m. So don't miss us. We hope you can join us next week when we have a guest, Richard Smith, a real estate tax accounting specialist who will help you optimize your tax planning. I've known Richard Smith for a long time. He's been a friend and my accountant for 27 years. He has over a couple hundred properties. There's a lot to learn from him, and I think that's a program you don't want to miss. So this is your host, Tom Wilson. Thanks for listening, and remember, the only thing that matters is what you do next.
You've been listening to Real Estate 360 on AM 1220 KDOW. For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. AM 1220 KDOW.